Assalamualaikum and hi. My name is Muhammad Suhaimi Kamaluddin bin Muhammad Kamal. My matrix number 284205, and today I will be presenting my final FAR project which contribute 20% to my final marks. Introduction. For this final project, I have analysed the annual report of Harn Corporation Berhad with the financial year ending 2020 and 2021. In this project, I will analyse and discuss the MFRS 108, 110, 116, 136, financial statement analysis, and lastly the conclusion. So a bit of a background stories of Harn Corporation Berhad. Harn Corporation Berhad was first discovered on 1st January 2000, and they now at least have 9 branches all over Malaysia, including Sabah, Sarawak, Johor and Bahang. It was first listed on Bursa Malaysia on January 2003. The principal activities of the Harn Group are in the cultivation of palm plantation, operation of palm oil mill, provision of plantation development services, palm oil and plantation management, investment holding, real property investment, and operation of a food beverage outlet. Disclosure of MFRS 108, changes in accounting policy, estimates and errors. In the year 2020, the group and the company have adopted MFRS 108 accounting policies, changes in accounting estimates and errors, amendments and improvements. The new adoption of the MFRS did not have any impact on the current and previous year financial statement of either group or the company of Harn Corporation Berhad in the beginning of 1st January 2021. The company have applied to the following standards, the amendments to publish standards which were approved by the MASB for the first time. The related amendments were an amendment to MFRS 16 leases and MFRS 9, MFRS 139, MFRS 7 and MFRS 4. However, the adoption did not result in insignificant adjustment to the group's or the company's current accounting policies. On 1st April 2021, the company have early adopted the amendments to MFRS 16 leases, COVID-19 related rent concession. The amendments was intended to apply until June 2021, but the impact of the COVID-19 pandemic is continuing. On 31st March, the MASB extended the period of application of the practical expedient to June 2021. So next is the disclosure of MFRS 110 events after the reporting period. So in the year 2020, the world has been informed by the news of a fatal virus called COVID-19. The government of Malaysia has imposed the Movement Control Order (MCO) for the selected states in Malaysia. The Ministry of Health has decided that Harn Company was allowed to operate their business during the MCO under a specific guideline stated by the government, even though the situation of the country at that time was not in great shape. The company itself has to actively monitor and manage its funds and operations to minimize any impact that could arise from the COVID-19 pandemic. As for the year 2021, the company does not state any disclosure of MFRS 110 events after reporting period, which mainly focuses on COVID-19 pandemic. Disclosure of MFRS 116 and 136. So in the table below, I have listed the list that should be included in the checklist prepared for the MFRS 116 property, plant and equipment. For MFRS 116, I have analysed and examined the disclosure of all items and the requirements that needs to be ticked in accordance to page 110 of MASB paragraph 73. In the list above, I can say that the company only disclosed some of important items in the financial report. First of all, they have listed the items of the measurement basis used for determining the gross carrying amount, the depreciation methods used, the useful lives or the depreciation rates used, and the gross carrying amount and the accumulated depreciation aggregated with accumulated impairment losses at the beginning and end of the period. In addition, they also listed assets classified as held for sale or included in a disposal group classified as held for sale in accordance with FRS 5 and other disposals. Increases or decreases resulting from revaluations under paragraph 31, 39, and 40, and from impairment losses recognized or reversed directly in equity in accordance with FRS 136, and lastly the depreciation. So as for the MFRS 136, again I need to refer to the MASB official website to prepare checklist of MFRS 136 impairment of assets, which I need to refer on disclosure section on page 140, paragraph 130. First of all, they have listed the events and circumstances that led to recognition of reversal of the impairment loss. Second, the amount of the impairment loss recognized or reversed. Third, the nature of the assets, the amount of the impairment loss recognized or reversed by class of assets. And lastly, if the entity reports segment information in accordance with MFRS 8 by reportable segment based on the entity primary reporting format. And lastly, the items of whether the recoverable amount of the assets, cash generating unit, is its fair value less cost to sell or its value in use. Key audit matters. As of 31st December 2020, the auditors indicate that the valuation of the property, plant and equipment is the key audit matter. The auditor has examined thoroughly which the PPE has the carrying amounts of the group's property, plant and equipment and right of use were 207,586,923 and 87,697,253 ringgit respectively, and these amounts accounted for roughly 43% and 80% of the group's total assets. PPE and ROU are valued at the company level at 20,253,371 ringgit and 48,258,750 ringgit respectively, which amounts to 6% and 40% of the company's total assets. We deem this to be a key audit matter due to its importance to the group's and the company's financial position, as well as the significant judgment and estimates made by the management to establish key assumptions used in estimating recoverable amount based on value in use and calculated by the projected discounted cash flow model or based on its fair value less cost of disposal. During the year 2020, the auditors performed a key audit matter regarding the impairment of PPE and right of use assets of the group were valued at 192,311,487 ringgit and 82,783,735 ringgit respectively as at 31st December 2021, and make up roughly 44% and 19% of the group's total asset. At the corporate level, PPE and ROU have carrying values of 19,546,905 ringgit and 47,051,493 ringgit respectively, which corresponds to 6% and 14% of the company's total asset. Financial statement analysis, profitability ratios. In this section, I will provide an explanation on net profit margin and return on asset ratio. Net profit margin is the ratio that measures how much net income or profit is generated as a percentage of revenue. The formula to calculate the net profit margin is simply divide the net income by sales. For the year 2019, 2020 and 2021, Harn Corporation Berhad has a net profit margin of negative 1.254%, 4.233% and negative 0.480% respectively. The trend of the ratios are negative for all 3 years. This means that in the year 2020, the company had an income of 0.04233 for each dollar of sales generated. But unfortunately, in the year 2019 and 2021, the company does not reach their net income as much as during 2020. Return on assets refers to a financial ratio that indicates how profitable a company is in relation to its total assets. The formula to compute ROA is net income divided by total assets. For the year 2020, the ROA for the company is 0.278%. This means that the company does not have a good ROA percentage as it was computed to be below 5%. A good ROA is expected to be above 5% and over 20% is considered as an excellent. Same goes with the year 2019 and 2021. The company does not have a good ROA percentage as the ROA for that year was negative 0.47%, and this is due to the negative amount of net income. Liquidity ratio. Current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. The formula to compute current ratio is simply divide current assets by current liabilities. A good current ratio is typically anywhere between 1.5 and 2. As for the year 2019, 2020, 2021, the company has a current ratio of 0.462, 1.506 and 0.984 respectively. In the year 2020, the company's current ratio is the only one that exceeds the ratio of 1. A current ratio of 1.506 indicates that the company has 1.5 ringgit of current assets of every 1 ringgit current liabilities. On the other hand, during the year 2019 and 2021, the company has a ratio of less than 1, indicates that the company may have problems meeting its short-term obligations. Quick ratio represents the extent to which a business can pay its short-term obligations with its most liquid assets. The formula to compute is current assets minus the inventory and divides it with current liabilities. For the year 2019, 2020 and 2021, the quick ratio for the year are 0.462, 1.504 and 0.980 respectively. This shows that during the year 2020, a quick ratio of 1.504 indicates that the company has 1.504 ringgit of liquid assets available to cover each 1 ringgit of its current liabilities. However, in the year 2019 and 2021, the quick ratio is less than 1, and this means that their assets are unable to cover their current liabilities. Solvency ratio. A business debt to equity ratio is a measure of the extent to which a company can cover its debt. It is calculated by dividing a company's total debt by its total shareholders' equity. A debt to equity ratio of around 1 is considered as an excellent because if the debt to equity ratio is less than 1.0, then the firm is generally less risky than firms whose debt to equity ratio is greater than 1.0. The company ratio for 3 years is just 0.856, 0.12 and 0.11 respectively. The debt to total assets ratio shows how much of a business is owned by creditors compared with how much the company's assets are owned by shareholders. The formula to compute the debt to asset ratio is total debt divided by total assets. For the year 2019, 2020 and 2021, the ratios computed was 0.095 and 0.094 generally. Generally, a good debt ratio is around 1 to 1.5 and the company ratio is considered relatively safe as the company has a good debt to asset ratio because the debt ratio of the company is below 1. And lastly is the conclusion. So for the conclusion, by doing this project, I have learned a lot regarding the related MFRS that I need to analyze in the financial year report. Being an accounting student is a tough challenge for me as I need to understand in detail each of the MFRS stated so that I can proceed with my analysis of the report. The part that I felt really challenging for me is the MFRS 116 and MFRS 136. But I need to create a checklist and examine each of the details required to be ticked in the checklist. Then I need to screenshot everything that were required as a proof, which are a bit tiring for students. That's all for me. Thank you.